Harland and Wolff Group is a UK-quoted company focused on strategic infrastructure projects and the Islandmagee gas caverns project. The recently signed FSS subcontract for the supply of 3 fleet solid support vessels for the UK Navy boosts contracted revenues to £900 million and gives the company significant visibility over the medium to longer term. John Wood, Group CEO at Harland and Wolff, joins us live. Once again, welcome, John.
Good evening, Donald. Great to be with you again.
Hi, thank you very much indeed for thinking of us, John. It's great to have you back.
Fantastic, thank you.
Okay.
And I'll just crack on, Donald. And,
you just crack on, John.
Go through a few slides, and good evening, ladies and gentlemen, and good to be here. As Donald said, I've got a few slides to take you through, then happy to take any questions anyone may have. So as we go through Harland and Wolff, for those of you that have not met us before, AIM-listed organisation, a board of 5. We've got our chairman, Malcolm Grote. Then we've got 2 other NEDs. We've got Katia, who's ex-Shell, banking, investment banking, and it's got a lot of experience in the renewables and energy sector. And we've got Sir Jonathan Band, who's also an NED with Carnival Corp, ex-First Sea Lord, so got a lot of naval experience in shipbuilding in his background also. On the board is also Arun Raman, our CFO, and myself. So a fairly compact board, which, look, it really gives us that ability to make decisions quickly and get through where we need to get to in the fast-paced environment that we're working in. As you'll see from the slide that's up in front of you at the moment, we've got the PLC is the main group holdings. Then we've got Harland and Wolff operations. Then that splits down into the different shipyards that we've got, which is Belfast, Appledore, Arnish and Methil. Then off to the side of that, we've got Islandmagee Energy, which is our gas storage project across the Northern Ireland in Islandmagee. And we've also got Islandmagee Energy Hub there on the side of that. And that's really incubating new technology and potentially future development areas within that project. So if you look at our history, for those of you that don't know the business, we started off with only the gas storage contract called Infrastrata. We moved from Infrastrata through to Harland and Wolff on the acquisition of Belfast in 2019. Prior to that, I was involved and undertook the FEED for the gas storage project. And I think we moved on from there fairly swiftly on the back of government policy and acquired the Appledore shipyard in 2020, and then moved through into 2021 and acquiring the assets in Methil and Arnish. And since then, it's really been a consolidation process, really getting our assets up to speed, converting pipeline into contracts, and now delivering on the same contracts. One of the things that we've done recently is we've had a bit of a reorganisation of the business, which is fairly normal for businesses upscaling and getting the rate of growth that we're looking to get, where we've switched the organisation into really matrix organisation, where we've got the operational divisions of the business and the functional leaders also. So we're really, every decision in the business is getting 2 levels of input into it, really improving our corporate governance and making sure the decision making that we undertake is to the right level that we need to be, and making sure all the key elements are covered. A couple of key things on this slide, you'll notice reporting straight into myself as the programme director for Fleet Solid Support. Given that is such a large programme, we've decided to take that straight in to the leadership team. And the other subtle change you'll notice is that we've actually split the Belfast yard into 2 yards, one dealing with ship repair and conversion and one dealing with the new build and fabrication, given that they're really 2 substantially different models in Belfast based on 2 different sites. It made a lot of sense for us to do that. So if you look at our business, it's the same strategy as we set out with 3 years ago. As I said earlier, we're 3 years into the 5-year plan. Our markets that we're into is defence, commercial maritime, energy, which really focuses on oil and gas, cruise and ferry, and renewables. And I think it's worth just spending a moment to talk through each of those markets. I think if you look at where we are with the defence space, we've obviously gone out and won the M55 project down in Appledore, which is proceeding very well. Milestones being achieved every month, progress being achieved every month, and the vessel is on schedule for redelivery. As part of that deal, we also acquired the ex-HMS Athelstan, which we've got 3 potential uses for. At the moment, the main reason for buying that vessel was to acquire the spare parts for obsolescence reasons for the corn conversion. Once we get to the end of that, it may be another navy that looks to put that vessel back to sea. It may be a training platform, or it may be a survey vessel. So that's one to look out for in the future. And I think Appledore's had a good run of other projects that we'll come to. You look across in Belfast and Appledore, looking at the Fleet Solid Support Programme. The programme's continuing to move at pace. All the milestones to date have been met on time. The procurement phase is well underway. The planning, design, work package building, again, is all underway. And some of the other works that were undertaken in all the yards is to really provide that fundamental baseline for other projects. If you look in the commercial market, one of the programmes that we've been heavily involved in is building some barges. That's really to acquire those skills of working the panel lines and actually working the fabrication process, really honing in on that cost reduction in our production lines, making sure we're efficient, making sure that we're actually getting the productivity and the man hours per tonne that we need. The work instructions and everything like that is coming through, so that when we do start on the larger Fleet Solid Support Programme, all that work's been done in the background, and we've tweaked our production system to make sure that we're cooking on gas when we get going. Energy, again, energy market, oil and gas, everybody thought was past it and had gone. We've seen an unprecedented level of new inquiries for oil and gas programmes and projects coming up. And I guess that's the sudden realisation that for the amount of time it will take to get the renewable market up to where it needs to be, there still needs to be that ongoing oil and gas sector. So we do expect some growth in that area. And again, cruise market, we're seeing an exodus of new builds. There's not a lot of new builds going on there. So what we're seeing is a lot of cruise, major refurnishments, revitalisation programmes, and we think it will sort of stay like that for the next decade before you start seeing any new programmes coming back into play. So again, all to play for there. When you look at the renewables market, again, we projected 2024 that would come into play. Again, we're seeing that really firming up now in 2024, being a great place to be. Even now, we're involved in numerous bids across different operators. And again, we're fairly comfortable with that market. So I think, there's all to play for, and the strategy's completely played out as we expected it would in the early days. When you look at the services that we offer, from the technical services, clearly that area of the business is getting a boost with the work that's going on FSS. The refit repair work, again, it is continuing to build. When you move through into the fabrication, again, there's a really good run rate going through the yards, and the production rates are really encouraging. And I think when we introduce the new panel line into Belfast, the difference that will make is phenomenal. I think we're talking 800 tonnes of panels produced per week with 13 men, opposed to just short of 100 men. So I think there's a significant benefit in the long run as that plays through. We then look at the repairs and maintenance side of the business. Again, constant churn of work coming through, which we expect to continue. We're seeing contract values increase. We're seeing repeat customers. And again, it's all about getting that level of business through. The area that we're really looking to focus in on, and I'll talk more about this in a couple of slides' time, is that next level, that next generation into in-service support, and looking at building the work that we undertake outside the shipyards to really get closer to the customers, give them an end-to-end service, and build revenue outside the yard. And then finally, the conversion aspects. And again, we're still waiting to land our first major conversion outside the defence arena. And we're also in the loop for various projects in that ilk at the moment. So we're hopeful something might come out in that space in the near future. And then finally, decommissioning. And I think decommissioning is something we've not played that much into. We've sort of sat back at the moment because there's lots of more interest and opportunities. But again, 5 markets, 6 services really de-risks the business. So again, when you look at our assets, conveniently located places around the coastline in the UK, ideal for renewable programs, ideal for defence, ideal for commercial. So we're in a really good spot. And again, some of the largest dry docks in Europe, 2 of the biggest dry docks in the UK, it really puts us in a great position in bringing back shipbuilding and sovereign fabrication back into the UK. So if you look at the model we're operating on today, it's a proven business model. We've proven we can win the work. We've proven we can get the yards up and running. 6 sectors, reducing the profile, and significant opportunities are out there when you look at the pipeline of over 5 billion of opportunities in that unweighted position. World-class assets, as I mentioned, and we're building the platform and building the business on the back of guaranteed and assured delivery, which is a really comfortable place to be. And I think every job that we turn out of the yard, it's another tick in the box and more customers come back. And I think the level of repeat business we've got is testament to where we are today. But let's be realistic in the whole space of where we are. We're still in year 3 out of year 5. We always knew results last year would be the tough period before we started seeing the uptick. Unfortunately, we missed the number that we were looking to get for revenue by the end of last year, which affected our year-end numbers, which was really unfortunate, but it was out with our hands with some supply chain issues, and it was just a matter of timing. But look, we're very confident we'll make our numbers this year. We know where the revenue's coming from, and we pretty much now know where the revenue's coming from for the following year. So we're in a much more stronger, stable position. And I think there's some really positives that come out of the numbers last year, whilst the overall bottom line number was disappointing. It's that piece around the cost of operations. And when you look at getting the revenue up, we're still managing to see those synergies in the operating costs across the different companies. So we still see there's lots of savings to be made there. We see vertical integration opportunities as we move forward. And you know what? The large area for growth is in the support services. So when you look at the split per market of where we think we are, and we look at the weighted and unweighted pipeline, you'll see the majority of this year's work is in that defence space. But then by the time we get to 2024, you're really seeing that renewables market start to kick in. And when we talk about renewables, it's not just renewables as in structures, it's also renewables as in vessels. And when you look at the local content regulations up in Scotland and from our methyl site, that there's a lot to be optimistic about for SOVs and that type of programme up in Scotland, as well as the fabrication of structures. And I think you look at that, it's one of our biggest sites, so it's got huge potential. And I think you look at the sites, we've seen it in Belfast, we've seen it in Appledore. By the time we get the sites up and running, by the time we get the new management systems and processes in, it takes a bit of time. Now we're seeing Belfast and Appledore really start to crack on. We expect to see that in Belfast. And I think the interesting thing with building barges in both methyl and in Belfast, it's great to see the competitive nature between the yards and see the competitive effort to be the most productive. So look, the focus for the next 18 months, my final slide, is really to focus on our HSQE to make sure we continue the downward trend with our numbers. Really a big push to convert the pipeline into projects and convert the backlog into revenue. We've got a backlog at the moment of over 900 million. It's really focusing on that and getting that well over $1 billion by the end of the year. The new debt deal that I'm sure is at the topic on everybody's lips. Look, as we operate on a month-by-month basis, We're not in any desperate hurry for cash. We're taking our time. We're making sure the debt deal that we get is the right deal for the business. We want to get the best deal. We're not forced. We're not under pressure. So we'll get that over the line when the time's right, when the deal's right. So we're quite happy to sit back. Obviously, there's lots of government departments involved in that, and we unfortunately don't control them, and they don't quite work at the same speed as we do. But look, we're fairly relaxed, and we will get that over the line, and it will be a good deal when it comes. But again, it's all about delivery and continuing to hit those milestones as we move forward, and continuing to take costs out of the business where we possibly can as we go. And again, it's about those productivity improvement rates in all the yards. And look, investing in new plant and machinery. I think one of the exercises we did was looked at how much money we were wasting on fixing old plant and equipment to try and keep it going. And I think that we've identified a lot of key areas where we can actually just replace the kit and be pounds in the long run. So I think that's ongoing. So again, when you look at what we're actually going to do and focus on, it's really in-service support. It's focusing on a Scottish strategy because we think there's a huge potential up there. You know, the column on the left is really business as normal. The column on the right is really things that we're focusing on to tweak and change a little bit. Renewed focus on renewable and cruise and ferry, and establishing a small network of services offices to really get local talent into those offices rather than, and it's people that can work remote from the shipyards rather than paying for them to travel, pay for accommodation and things like that. And it's building up that local base in customers' backyards so that we're building and we're embedded with the community, and really thinking Aberdeen is one of the areas that we will be focused on. And I think it's, you know, continue to really build that Harland and Wolff brand globally and lead the industry in projects and development to make sure that we're well positioned for the future. And you know what, if we get all that right, undoubtedly we'll see some shareholder value increased. And I think it's one of the things we're very focused on, and I think it's the biggest goal we've got this year is really to bring some shareholder value to the table, given we're year 3 out of year 5. It's the area that we really want to focus on this year. So, Donald, that completes the slides, and you'll be glad to hear I'm a minute early. You always tell me I never finish early, so hopefully that helps you out a little bit tonight.
It does indeed, John. You're a complete star. So I'm going to throw you a curved ball by asking you about Islandmagee, first of all. I've had 3 different people asking about Islandmagee. We've got Victor Marshall, a gentleman, Darryl Martin, and one other. And it's basically, if you could give us an update on the Islandmagee judicial review, please.
Well, look, Islandmagee still remains a key project in the heart of the company. And we're still very, very committed to it, and we want to see that project built out. Obviously, we went through the judicial review. I spent a week personally sat in the judicial review, listening to the arguments on both sides, really so I could get my head around where we were with the project. And I think, look, I'm still optimistic that we'll get it over the line. If we don't get it over the line, there's a few things that we've already started working on that may be an area that we may be asked to improve on. So we've started working on them, and we started on January, February on one of them. It's really to make sure we don't have to wait another year before we go back again if there is any downside. But look, we're still fairly optimistic for a positive outcome. When do we think that will be? September is what we're led to believe at the moment. Again, unfortunately, a bit like government, we can't control the court's timetable, but we believe we'll get an indication in September. We don't believe we'll get any advance notice, maybe 12 hours maximum before it's released publicly. So everybody will know as soon as we know, really.
Okay, let me start. Let me ask you about your recent annual report and the post-tax loss position, please, John.
Well, look, I think, as I've mentioned earlier, we're 3 years into that 5-year plan. Did we always expect a loss? Yes. Did we expect the loss to be as big as what it was? No. I think that was because we had revenue that was deferred from 1 year into the next year. And I think, look, we've seen substantial infrastructure building. We've seen the capability, the capacity building, and we've been investing really heavily in fleet solid support to build that and building the pipeline of multi-million-pound programs. So I think, look, yes, we have had a loss, a larger loss than we'd like. But look, the foundations that have been set now are fantastic for the coming years. And, I think it's those lower sales than what we'd preferred. But look, we are where we are, as they say, and it's all about how you bounce out of that. And I think some of the investments that we've made have been very strategic investments to actually position ourselves for the future. And I think winning the fleet steward support contract, while it's old news now, that really sets the company up for the future, because what it does is it underpins the baseline. Once the baseline's underpinned, the costs are covered, then it gives us that opportunity to sort of add contract and layer of contract and layer of contract above that. So it really goes as we are. And I think I did mention earlier, we've seen some positive signs of operating costs starting to fall now as the volume increases. So again, that's good. And look, everything's on track, really is to where we want it to be from an operational point of view. And look, I think we're beginning to move to the position we were. I think if you look at the plan, which I actually do occasionally go back to the original plan and review it to see where we were actually looking for a backlog at this stage of 600 million, but we've now got above 900. So look, I think there's positives to take out of the bad result. But look, we're very optimistic that we will hit the numbers this year. And, we think there's lots of additional work and contracts that will head our way, given the negotiating positions we're at on several deals.
Great. That's a great summary for 2023. Let's look ahead to new contract wins. Have they been what you would have hoped for? And what's to come? Contract wins to come.
Well, look, I think the year started off very well. I think we're really pleased with the way things have gone. It's really, the last 12 months, it's really been about consolidating our position, really getting ready for that next phase of growth. And I think it's about converting the pipeline into backlog, then converting the backlog into revenue. So look, I think we're in a comfortable position of where we are. Again, we've hit our milestones on the contracts that we've got in place. And look, I think it's really about driving and deliver these new contracts. I mean, we're down to the last 2 and the last 3 on numerous programs. It'll just be a case of what hits first when it hits. So I think if you look at where we are, we think we're probably slightly ahead of where we expected to be by the third quarter this year with what we know already. And look, I think we continue to refresh the team and get the right people in for the right roles. So I think we're in a strong place,
Great. Okay. Lots of people have asked about the funding position, including Trevor Draper. So you called it the debt deal. What's the latest position on funding?
Well, look, I think when you look at funding, Donald, it's fairly straightforward. We're in a position where we've got a deal on the table today that we could take. We're not about just taking the first deal. Unfortunately, we did commit to a date when we would get the deal done by. But when you see an opportunity for a better deal, then, hey, we're looking to hang on to get that better deal. And I think when you look at the level of debt that is in the business and you look at the cost of that debt, it's really all about making sure that that debt is coming in at the right price. And I think when you look at the deal that we're trying to get to, I think we really need to focus on that and make sure we come in lower. And I think, you're talking tens of millions of difference between deals here. So I think it's worth that little bit extra time. And if it means me getting a bit of flack in the meantime, me, Donald, I'm happy to take that bit of flack as long as we get the deal that's right for the business and right for the shareholders.
You have a thick skin, John. Okay, David Wynn asks, are we winning sufficient contracts in the wind energy sector? I think he's looking forward to 2024 when you're putting a big reliance on renewables. Is that coming through at the moment? Do you see that beginning to happen?
Well, I think when you look at renewables, I think the reason we're not 100% in renewables and we've got 5 markets is you want to spread the risk. I think everybody's been relying on renewables for the last 15, 20 years. And it's ramping up a lot slower than everybody would bank on. I mean, when we put the strategy together, if we'd gone by what we were being told at that point in time, we would have probably said you would have seen the ramp up 23. we didn't. We delayed it because we thought it would be close at the end of 24. And that's exactly what we're seeing. And I think it's not just about the renewables, it's about all the different parts and components that make up the renewables. And I think, as you can see by the projections, we are seeing renewables being a large chunk of the business. But that's not just in heavy fabrication, that could be in vessels, it could be in CTVs, it could be in maintenance and in service support. So there's a big chunk towards that renewable sector. And look, it's really encouraging. And I think, when you see the bipartisan support renewables has got, depending on governments of the day, we don't see any of our markets changing. We see it's still been a fairly buoyant place to be.
Okay. An interesting question from Jamie Broomfield-Payne, who asks, why did the board of directors decide to ramp up recruitment for the FSS contract now when it actually just starts in 2025? Now, I think you've already half answered that, but it is an interesting perspective on how to run a business. What are your thoughts?
No, look, I think if we didn't ramp up to 2025, we wouldn't have won the contract. I think it's as simple as that. I think, you need to ramp up the project to win the project. You have to ramp up the project to prove you can deliver the project with some certain degree of certainty. And I think when you look at the percentage of the business that we've got, there's less than 5% of the business at the moment actually working on FSS. All the other employees we've got are working on revenue generating projects, and even FSS itself is a revenue generating project at this moment in time. So I think we've got the infrastructure upgrade that we're working on. We've also got the work pack preparation. We've got all the design, nesting, design, detailed drawings undertaken. And then there's training of staff on the numerous other projects it's going through. Then over time, they'll transition into FSS. And I think, when you want to win large projects, you have to invest to win them. They don't just turn up on your doorstep. And I think it's making sure that the staff are capable and they're working as productively as we possibly can. And I think, look, that's key to all of the yards and making sure the continuation of employment, so that as we go forward, all the people in the yards are constantly busy, no matter whether it's defence, oil and gas, renewables, so that there's always work for them. And I think you don't then get hit with every time you get a new project and training people up, then hire them and fire them again. It's all about that continuation, because that's where you get your productivity.
Okay. Jamie also asks, why have Harland and Wolff only manufactured 3 out of 11 Corrie barges 8 months into 2023?
Well, Jamie's in a positive mood tonight.
I know, he's very jolly, isn't he?
Look, likewise, really, I mean, when you look at the barges, you're not actually going to build 100% of one barge, put it out, then make 100% of the next barge.
It's not how it works, no?
You're actually building a whole load of components that are all the same, then another load of components the same, and then starting your assembly and putting your assembly together. It's all about improving productivity, reducing costs. And I think one of the other things we've run through with this is actually getting our working schedule sorted out so that we can actually run the asset 24 hours a day, 7 days a week. So we've been using the barges to trial 24-hour working in the yard to see what that looks like. So it's all about getting the maximum production and sweating the assets as we go forward. So I think, look, it's just a production methodology to actually get the number of barges out when we want. And I think, the first one or two always take longer because of the first one or two. Then by the time you get to the back end, you've got numerous barges under various parts of production, so that they start coming together a lot quicker,
Okay, we're running out of time, sadly. It's been a fantastic night. Michael Vidal asks, when will you get back to giving consistent quarterly trading updates? That's a good one.
Well, I actually missed Michael today because he wasn't at the AGM. He's always at the AGM. He wasn't there today, so I thought he might appear someplace.
He's asking questions live instead.
Absolutely. So look, we've got no intention of going back to quarterly trading updates in the short term. Half yearly is where we'll stick up.
Okay, sorry, Michael, that's a firm no. Okay, Glenn Jones is keen to understand what the position is with Sea Rose. It shows Harland and Wolff down to the last 3 on the website for the Isles of Scilly ferries, which is a 3-ship replacement contract, jointly worth over 150 million. Where are you with that one? Do you have any inside information that you can give us on that one? Perhaps I phrased that badly.
I think you phrased that very badly, Donald. Look, I think, yes, we're tendering, we're involved in a live tendering operation for all those projects at this time. And that's about all I can say at the moment, I'm afraid.
Okay, fantastic. Okay, John, you've been a complete star. 3 minutes over. It's been an excellent evening. You've got, I've got to say, John, you've got a lot of information out in a short period of time.
Perfect. Thanks, Donald. And look, it's always a pleasure to see you, and I'm sure I'll be back to see you again soon.
That was a fantastic update for new investors, and I have to say for old investors. If you're a long-term holder of Harland Wolff, you must have learned a heck of a lot from that. So thank you, John.
Thanks, Donald.